trade deficit widens. A promising sign of recovery, experts say. The country's trade deficit widened moderately in the first 9 months of the ongoing fiscal due to higher import growth, which is a sign that the economy is gradually recovering from its depressed state of affairs. Between July and March, the trade deficit, which occurs when imports outweigh exports, stood at $14.49 billion, up 20.02% year-on-year, data from Bangladesh Bank showed. For all latest news, follow the Daily Star's Google News channel. During the period, imports increased 6% from that of a year ago to $42.76 billion, while exports went up 0.06% to $28.27 billion. Expanding the trade deficit is a good phenomenon for Bangladesh as the economy is largely as an import-driven one, said Mustafizer Rahman, a distinguished fellow of the Center for Policy Dialogue. Major imported items of industrial raw materials have increased in recent months, which has already given a boost to the export sector as well, he added. Imports of dyeing and tanning materials increased 8.54% year-on-year to $615 million in the first 9 months of this fiscal year. Imports of yarn also rose 1.61% to $1.52 billion, but staple fiber declined 17.25% to $733 million. Rahman said that imports of food grains also surged during the period, putting a positive impact on the overall import payments as well. Import of the item stood at $1.9 billion in the first 9 months, an increase of 41% year-on-year. Rahman went on to express a hope that both imports and exports would be on the rise in the months to come as the latest restrictions on public movement did not have a massive hit on the economy. Economic activities are now almost in a normal situation, helping the majority of industries to keep their wheels turning, he said. In addition, the country's major export destinations, North America and Europe, are showing a good performance in tackling the coronavirus pandemic, meaning that demand will increase more there. Although the economy now turns around from the depressed condition, the pace of new investment is highly feeble given the frail import record of capital machinery. Import of the key ingredient products for expansion of the investment sector contracted 13% to $2.63 billion in the July-March period. Ahsan H. Mansur, executive director of the Policy Research Institute of Bangladesh, however, said that the indicators of the central bank's balance of payment did not show too much of a positive indication. The economy is recovering slowly as per the previous projection. But the time is yet to come to calculate the ongoing repercussion deriving from the ongoing restrictions on movement, he said. The government should take a wide range of fiscal measures in its upcoming budget in order to protect the small and medium enterprises (SMEs) from the business slowdown, he said. SMEs should be supported by taking fiscal measures as many of the enterprises have already been closed. The government can even rebate a portion of their bank loans in order to protect them from the crisis, said Mansur, also a former economist of the International Monetary Fund. If SMEs can get back their previous tempo, both employment and domestic demand will get an uptick, he said. Said Mahbubur Rahman, managing director of Mutual Trust Bank, said that import had started increasing since the first month of January, but it had faced hurdles from March once again. We are still in the pandemic and so, there are uncertainties for the economy, he said.